Okay, good morning and welcome to everybody who's joined us so far. We'll be getting started in just a moment's time. Okay, great. We'll get underway. Well, look, it's that time of the week. It's 10 a.m. on a Thursday morning, on the third Thursday of every month, where we like to touch base with anybody and everybody involved in the mentor community and explore the idea of business insights and bring some business concepts to life as best we possibly can. This week, we thought we'd explore the idea, or certainly this month anyway, about buying your own business. Now, it could be for somebody who's out there looking to purchase a business. It could be for an entrepreneur or a business owner who's looking to sell their business, or it just could be somebody working in a business and wanted to take the opportunity to reflect on what's going on inside your operation. And of course, as part of that reflection process is an opportunity to identify improvements. Now, today, joining me to explore this very exciting idea, I have from Mentor Education, Dr. Mark Sinclair, Chief Executive and Academic Officer, Iona McKimmie, and special guest, Dr. Jim Taggart. Welcome, everybody. If you wouldn't mind just giving a brief introduction about yourselves, and we'll get underway. Mark, I'll hand on over to you first.
Thanks, Jim. Look, I'm an ex-KPMG consultant, AT Kearney consultant doing strategic plans for businesses, and been involved with hundreds and hundreds of businesses across the world, and looking at the value proposition and the governance requirements and funding opportunities for business. So this is a topic that I'm really excited by, and I'm really dying to get into it.
Excellent. Iona McKimmie.
Good morning, James, and good morning, everybody. I'm the CEO of Mentor Education. I've been involved in the education and training sector since 1987, so I've been around for a little bit, but also extensively involved with a number of business initiatives and organisations that relate to family as well. So I have some great insights to offer everybody today.
Excellent. Well, look, certainly this idea of family and company culture is something that we'll touch on today, and look, of utmost importance, particularly in the modern business environment. And finally, without further ado, Dr. Jim Taggart, welcome.
Well, I feel like the adolescents in the group when we talk about family, you know, that naughty child where you've got to put on the naughty step. But I'm absolutely delighted to be part of the panel for Mentor. Mentor is a contemporary leader in providing quality information. And I think the people that we have, and I think that the people that we attract and want to listen to grow and to become better people is testament to that. I have a background in business and education and a whole range of other areas, philanthropic, and I'm absolutely delighted to be able to share that experience that I've had over the last 40 years at every level, so that people can learn and reflect inwardly about who and what they want to achieve. That's the key. Mentor is not about telling, it's about sharing and helping you grow. That's one of our very key mantras.
Excellent. Thank you very much, Jim. And I certainly know with these presentations, it's as much about delivering information as it is about putting questions to the audience and
absolutely
taking a moment to self-reflect. And in that very vein, the first question that we're going to ask today, and I'll get you to lead with it if you wouldn't mind, is what is it that you're really buying? Okay, what does that mean when it comes to exploring the idea of buying your own business?
Well, I think that's a really, really good question, because it's a very open question that, you know, some 92% of businesses in Australia employ less than 3 people, and they have aspirations, and they have a whole range of things to try and come about when they buy a business and build that from either some time in the business cycle to where it is today. And I often like to reflect upon what people say, James, and Anthony Bolinskin says, in business, when you buy it, be undeniably good. No marketing effort or social media buzzword can substitute for that. So when you buy a business, the fundamental platform, the footings of the business is you need to be fundamentally good at what you're going to do. That's not negotiable. And that's key, because we can look at all the metrics of why you buy it, economic, social, political, and all of those things. And any type of SWOT analysis will tell you what to do and so on. But at the end of the day, if the driver is not about becoming and sharing with you and to the people that you wish to have in your world, in your tribe, about being good, then it will fall apart. We can look at, economies of scale and fixed cost and variable cost and what provisions for bad debts and all the really big technical things and contingent liabilities. But if that's not enveloped around the whole notion of being good at what you do, then I think that's going to be a problem, because any business can look good on paper.
Excellent. Thank you very much. And then look, with respect to what you're really buying, Mark, I'll hand over to you first, and then followed by Iona, and about the idea of exploring, I think, what a organisation's personality is, and talk to perhaps some of the elements that are up there in front of us today and how they might contribute to that.
Hello there, Mark. Mark is muted.
Hello, sorry. Hi, James. Look, depending on what your strategy is, it's very different. When you look at an organisation, you look at the asset of that organisation that is very specific to your strategy going forward. If you were Kogan, right, buying Dick Smith in recent times, what you were looking for, what it would appear that Kogan was looking for was customers. They acquired a certain number of customers that aligned to the products that Kogan was distributing and selling, and they were buying a large number of customers and making an estimate on their stickability, their average spend over their lifetime. Now, that's very different to an organisation that might buy a strategic advantage, which could be intellectual property. They might have a trademark, a patent. They might actually have an asset there that would give a competitive advantage in that organisation. Other organisations are looking for market share because they're looking for economy of scale. Economy of scale differs for different industries and different segments, but some organisations, once they get past a 60%, like Telstra is a good example of market share in a particular market, then that gives them greater economies of scale. They get greater quality, and reduce the cost of output. So market share may be something that's really important to them. Culture might be another thing. Some organisations, like particularly incumbents, banks and whatever, just struggle sometimes to become a technology leader, right? They do all sorts of things. They create separate businesses, skunk works. But what they're really maybe looking for is a innovative culture, and they're buying organisations or buying shares within an organisation to do that. Market position, potentially, yes. And technology also, quite often they're looking for a technological advantage. So look, it depends very specifically on the buyer's strategic objective. They might want to do market penetration. They might be in the US and they want to get a foothold in Australia. So there's a whole range of different objectives the particular buyer would have. And you don't necessarily know that until you've done some market research. So if you are thinking of selling your business, then it's all about identifying who are the potential buyers and developing a list of 30 or 40 of those, and then segmenting them into different objectives that they might have, and then thinking about how best to position your organisation going forward to be attractive.
Excellent. And Iona, with respect to, I think, human capital and certainly that culture, I mean, if you could talk to the value in acquiring something like that, I mean, is it difficult to develop internally throughout the acquisition process? I mean, what are some of the challenges in maintaining that? And later on, I mean, obviously without going into too much detail, we'll explore some of the value that it will add, but certainly with respect to culture and capital, human capital that is, the value in acquiring such things.
I think it's very true, James, that organisations are made up of people. And if we don't have the right people in the right positions, if we don't have a culture that's inclusive and forward thinking, that encourages innovation, that encourages our people to be involved and to have an opinion and to invest themselves in the organisation and invest themselves in their roles and our clients. We really can't leverage any niche that we operate within. And depending on the scale of the business, often we're small business owners or we're medium business owners, and we operate in a true niche because our product is something that is needed. So our people are our biggest asset. And one of the things that I would always suggest that we look at is our people, is the breadth of skills that we have, for example, in our workforce. And is that workforce going to be able to take the organisation forward to the next phase of its development? So if I was looking at my business, I'd want to know how well it was resourced with those people to actually take the business in the direction that I might want to look at it too. Because forward thinking and forward practice, the world is a rapidly changing place, and we have to be adaptable as business owners, and we have to have products that don't just have current demand, but we should always be looking at future demand as well. So that human capital aspect of any organisation is incredibly important. We need an approach, the skills base to take us forward, and knowledge base to actually be able to influence that process and support that process. So people and culture is incredibly important, and our management structure and how we actually approach that. What do the job families in the organisation look like? Are they adequately resourced? Is there gaps is there obvious knowledge gaps that we might need to actually backfill if we were to buy our own, if we were to purchase our own business or purchase any business really? So people are everything, and the scale of the business obviously will determine the number of people that and our human capital. But investing in human capital, so we may actually look at the business and we might say, well, we need to invest in this area of the business to build the business as we acquire it, to take it forward into the next phase where we want to take it. So people and culture are incredibly important.
Can I just add a little part? Iona, that was fantastic. I just want to add this, if I may, to our listeners, please, James and Mark. It's really interesting because as leaders and those listening to this fantastic webinar, what's critical with human capital is that those in positions of influence, and we all have influence, but those in the front line, in my humble opinion, and this is really critical to understand, need to tell the story. And right now with COVID-19, it's been an incredible story, and it's really tipped things upside down, thrown them out, and done a whole range of things. So I think one of the most careful crafting skills when you're buying a business and having a business is for those to step up. And I'm reminded by Jason Kalanis, who was the founder of a company called Launch, says, fortunes are built during the down market and collected in the up market. So it's precisely now with your people that you tell the story during these challenging times that help you reap those rewards in the good times. And that to me is really cutting edge thinking. Now is the best time to be in business. We're not saying it's not challenging. We're not saying that you shouldn't be doing these things. That's all part of the risk and return in a free enterprise system. So the storyline between people and sharing that pain, those challenges, those resources will stand you in good stead going forward in growing your business, and particularly your own business that you have right now in this COVID-19.
Excellent. Thank you very much, Jim. And look, I'll hang on to you, if I may, for just a moment, and diving a little bit deeper. I mean, certainly the idea of having some sort of advantage or some sort of special offering when it comes to any market is of crucial importance for long-term success. And look, it wouldn't be an educational webinar if we didn't introduce some sort of academic or model of some sorts. And of course, up here we've got Porter's 5 Forces. Jim, if you could talk to this particular model a little bit for us, and I think about the value of having some sort of competitive advantage knowing what it is that your competitors are doing, and what sort of impact that would have on the decision as to whether or not you would buy your own business.
It all boils down to, and I think this is a very good schematic or a very good diagrammatic presentation to encapsulate what happens in business. Business is dynamic, and people need to understand that there are forces competing, complementing, and actually diffusing all at the same time. It's an entity, it's an ecosystem. And what I'm saying for the smart young people, for those in the maturity line within the business cycle, wherever you are, it's critical that you try and look at all of those forces that interact directly and indirectly. And when you look at the diagram in front of you, you will see it is all about competition. Yes, you have to acknowledge some criteria, some phenomenon that's operating. But when you look at this, you'll see what is it that impacts on your business. And there's so many that there. So the key to me is, do you have enough business intelligence to understand your business? And we'll talk later about who is in the tribe, who is in that tent that will help you build that in your industry. And my question to you as a challenge, ladies and gentlemen, is this: how well do you know your industry? Not only your business, but your industry. Why is it, and they come now with questions, why is it that some people can succeed better than us? What do they have that we don't have? Why do they have that and we don't have that? Can we get that, yes or no? So in the context of this diagram, what we call this overarching model is those key questions. They become questions about what and you need to ask honest questions, and honest questions need to have time around them. They need to have a framework that embellishes now, short-term, long-term goals. When you look at that time horizons, that business intelligence that centers around, would you buy your business, which is the overarching, again, theme for today. What do you know about your business? What do you know about other people's business? Take the converse of that. What do people know about your business?
Excellent. Thanks, Jim. And Mark, I'll get you to jump in here and talk to us about, I think, maintaining a competitive edge, or, something that anybody and everybody else in the market can't offer. How would, a business go about developing that, and what sort of impact would that make on the decision as to whether or not to, of course, acquire your own or somebody else's business?
Well, James, look, to Iona's point, this is about human capital and process. You don't just get the information overnight about the competitive positioning of your business, supply power, buy power, new threats, substitution, and the like. That this is a deep dive, a deep understanding of the environment that the business operates in. And if you're selling a business, it's important that you have processes and demonstrate your understanding of this particular situation. And not just that, it's a situation whereby, so it really requires a considerable amount of effort on a regular basis, to actually analyse the SWOT analysis of your organisation, the competitive environment. Likewise, if you're looking to purchase a new business, you need to appreciate that the people in that organisation have a good grasp of what's happening and the trends that are emerging. For example, in the last 3 months, we've seen growth in e-commerce activity, purchases, people going through the barrier of entry, becoming involved in purchases online. That 3-month growth is equivalent to the same amount of growth we've had over the last 3 years. So what we've got there is an emerging trend that has accelerated. And any industry has a whole range of trends that need to be appreciated. Financial services, it may be robo-advice, it may be the regulatory environment that's causing divestment of banks of financial services operations and the like. So that understanding is really important. It's a in-depth understanding. It's people-based. There should be systems and processes where you regularly analyse this environment. You've got a new business plan. And most importantly, it's reflected in the sales in the organisation. It's reflected in your positioning, the growth, the quality of the particular customers. So if you're buying, you need a really good understanding of the industry, and it's not just a fleeting understanding or bringing in an expert to advise you in the short term. The buyer will have to have a real in-depth and probably a long-term history in your particular industry. And likewise, if your own business, if you're going to succeed, you've got to be able to empower everyone in your organisation to really understand the competitive nature and competitive positioning.
Okay, great. Now, Iona, who's on the team? Okay, subject matter experts, industry experts, Bank of Human Capital. Now, we briefly touched on this before. This is an area that you're very, very strong in. I'd like to hand it on over to you to talk to a couple of these points. And then finally, Jim, afterwards, if I'm sure you've got some insight on this too, but certainly first, Iona.
I'd actually just like to flow on from or to continue on with what Mark was talking about just there, because it does directly relate to who's on your team. One of the things that we need to consider in any business is our product life cycles and our product relevance. So if I was looking at, sort of buying my own business, I'd also be assessing that as well. I'd be assessing what we sell, because business is transactional. So what we need to actually do as part of looking at any business purchase is to look at the product, to look at where it is in its life cycle, and look at how the product is actually dealt with, how it's produced, how it's managed, how it's distributed, and how relevant it is to the current market. It's very easy to purchase any business that has a great profile. The business goes great for the next 12 or 18 months, but the products that the business is actually producing and distributing, or the services it's providing, at the end of their actual life cycle. So one of the things that we need to do as we need to look at is those products or services, or the combination of both, and how relevant it is. So who's on our team? Who's our industry experts? Our industry experts aren't just operations related, but they're also industry related, and they also look at, demand, distribution, and they also assist us with market intelligence. Because if we're looking at purchasing any business, we need to know what market we can take it into. Obviously, we're going to purchase it to grow it. We're not going to purchase it to wind it down. So they're the people that we want involved. And at the moment, sort of in any business that's static, and I can sort of recall a number of times that I've done this, where we look at our workforce. And we look at our workforce planning, and we look at our product lines, and we look at or our services that we provide, and we look at the processes that we go through to make those available and to distribute that. And we look at our human capital, and we look at the skills base and the knowledge base that we have. And we ensure that we have, or we look at whether we actually have a multidiscipline team. Reliance on one key focal person is a mistake, because if we take that person out of the equation, we need to know that other people can step in and can actually undertake, parts of that person's role. So we need to look at the team structure, we need to look at the organisation structure, and we need to look at its effectiveness. So there's a number of things that we need to draw on our industry experts for, and that is product, market intelligence, our production or our distribution processes, but we also need to look at our internal knowledge base. If we're going to change any of that or grow any of that, do we actually have that that multidiscipline team that are able to take the business forward to where that we're looking at purchasing to the next stage of its development? All businesses go through a cycle of their own. So you've got the first 12 months where things are up and down. So in the first 5 years, it either really succeeds or it just stays static. And then often there's a cycle at the end of it where we've been so busy maintaining our business that we've overlooked the fact that our products may have become, or our services, there may be a decline. They may not actually be as current as they should. So we need to actually also look at bringing somebody in who is a business consultant that can actually look at the organisation as a whole and tell us where it is in its life cycle. And from there we can actually plan, and we can plan what we're going to do, how we're going to do that, and we can develop it, and we can re-strategize basically. So our strategy is incredibly important. Without a good strategy and without being able to strategize to that level, we can't take the business to its next iteration, if you like, or into its future and grow the business. I'll just toss back to Mark here, because Mark is very good at strategy. And Mark, could you would you like to add something here?
Look, I think there is process and structure that supports it, and that's typically in a governance type environment. Look, the process of business planning, the process of strategic planning, operational planning, risk analysis, market analysis and all that, ideally is formalised. The greatest ideas come from groups, from good individuals that challenge each other, that work together, that get the aha moment and conceptualise a real opportunity for the business. And I suppose, you know, when someone buys a business, they're buying the future potential. And look, you know, as Jim said really early on, it's not just the mathematics of that process. It's not just, you know, we're going to pay 3 times EBIT or whatever it might be, because that's all good and well. And then you look at the risk and factor and whatever, but you'd much prefer to find a really innovative team with a great insight and support that process. You know, I'd much prefer to support 2 guys working, innovating and developing something from their garage, right, that turns into Microsoft, than I would to buy a mature business that someone is looking to exit, maybe because they see a potential issue on the horizon that is not obvious to the potential buyer. So look, to Iona's point, it's structure and it's people, right? You need to get the people together. They need to have, you know, deadlines to put together the business plan, go to the board or to the executive committee to actually develop that. But ultimately you need the opportunity to really think and have great ideas, and that comes from people, and that's external people, internal people. So there's a whole ecosystem that you have to develop to actually be innovative in your organisation. Thanks, James.
James, can I just add a couple of things there, if I may? And I want to try and build on the great things that Mark and Iona have highlighted this morning. It's very interesting. There's been quite a considerable amount of work done on teams and groups and things like that. And I just want to share a couple of little things to think about, because as leaders, as people listening to this, you need to take your thinking to another level. Tyndall, Stwaksky and Jacobs did some work in 2008. And while that's not important, it's important because they looked at the whole area of what they call shared mental models. And that is, they said that leaders and people that you want in the tent, in the tribe, in the team, need to have a shared mental approach to the problem. And that is very challenging. They looked at things such as knowledge, expectations, conceptualization, cognitive representation, and they looked at those things when you put people who you want to come and join your team and see how they bring those sets of skills in a group environment. Because when we talk about a team, in a business with 10, 20 people, there are a multitude of varying subgroups of teams. And the key to success in buying that business is to ensure that there is mental vision sharing that brings about unity and cohesion. And there's a lot of theory around cohesion theory and all of that. And while that might seem like, well, how is that related to business and what we're talking about today? You would agree with me that all the speakers today have very well highlighted as a theme the importance of human capital. So when you put an individual with someone else, you create a team. And then when you multiply that by a number, you still have a team, but you have a complex array of interactions. How do you achieve the goals? How do you get those things achieved if you're not able to massage, work with, share, and identify those key goals and outcomes you want for today? And that's no different when we finish this webinar. What do you want to achieve from today? All of us, the four of us speaking with you today, are a team. There's no question about that. Sharing with you strategic output, strategic objectives to give you quality information to think about, would you buy your business? And that's very important to think about those things in the context of groups and how they either go forward or backwards.
Excellent. Thank you very much, Jim. Now, I'll hang on to you to talk to us about reputation. And this is something that we've explored before, and certainly a big impact and a big influence with respect to whether or not you decide to acquire a business or not. Now, reputation extends beyond your reputation with customers, but also your reputation amongst your staff, amongst your stakeholders, your suppliers, and then, of course, looking at your promises and track records. Talk to us a little bit about this.
I can't begin to tell you the importance of reputation as a currency. And I've got to say that while it's not directly put onto your balance sheet as an asset or a liability, it really is. It really is. I think it's the greatest asset or liability that a firm can have. You know, and I say these things to challenge you. When you see a Mercedes-Benz sign, when you see a big W, when you see an office work sign, when you see a police sign, they all give you a value about what they are. Within 1/1,000,000th of a second, you sum up the values associated with that particular motto, that particular branding. So it's really critical that you see. And for me, the reputation is embedded in your name. It's embedded in those things which are critical. And if you don't believe that, just ask people what's happening now in the social situation. So for me, reputation is critical in everything that we do, what industry we're in, what staff. I can't believe the most important one in there with reputation is the bottom one. And I'm going to be challenging because I think a lot of people make promises but are not really reflected in their track record. Now, I just say that to challenge your own thinking to our listeners. You will pick up beautiful brochures, webinars and all that say, we want to be the best service. We want to provide you the most cost effective. We want to do this. We're open from 9 till 5. I rang a government situation the other day, and I rang at 5 to 4 and it said, please ring back between 9 and 5. So what that said to me is, maybe it was a mistake, but no one's checking their messages. That's really what it was trying to say. This was on the front desk. So people had gone for the day and so on. Now that might seem nitpicking. It's not. We live in a world that's 24/7. If you're not available, and you're seeing that now with education, people, the flexibility associated with it. So James, for me, reputation, and that's hinged very much on what we say we think we're going to do and what we actually do. You know, for people, if I say I'm going to have a meeting at 8 o'clock and I arrive at 20 past, what are you saying about that relationship? What are you saying about what's important? Are you saying what I say is I don't do? And there's so many things. So people are very quick to measure a whole range of things. And so for me, that goes back to what we were talking about, group cohesion theory and so on. what are those 5 or 10 things within your organization that are non-negotiable in trying to attract, maintain, and enhance the experience of those clients with you? Because let's face it, any product today has a multitude of substitutes, absolute multitude of substitutes. And so if you're promising and not delivering, you'll pay for it in your P&L.
Excellent. Now, certainly a big part of reputation, and look, I think in many respects is always attempted to be quantified, and that's the idea of goodwill. Okay, I mean, goodwill really is a business asset that can be quantified and added to the value. Mark, in your experience, I mean, what are some of the tools that, you know, are used to quantify goodwill? And again, you know, talking to the impact that it would have on the decision-making process with respect to A, the valuation, and then B, the decision as to whether or not to acquire a business.
Yeah. Look, James, again, it depends very much on what the buyer is trying to acquire. If it's a major player trying to aggregate market share, or it's a major player trying to buy into a niche, so you've got a specialisation, you know, your business is specialised in a particular space, or you've got a competitive approach or competitive technology. People are looking to, if they are purchasing future earnings from a business, then goodwill is just fundamental, right? Because we're looking at the transferability of those clients from one organisation, in effect, to another organisation. And the build-up of goodwill is important for that transferability. Goodwill, as Jim said, it is in many aspects, right? You know, you can have goodwill that you've generated from customers, surely, but suppliers, from your staff. It could even be from the, you know, from a public relations point of view, it could be the media that you've developed. And in effect, goodwill is the aggregate of the goodwill that has been generated over a long period of time. So it's a whole range of actions that work towards your, you know, or interactions with the particular stakeholder that have developed and cemented that goodwill. Now, that goes to the stickability of a customer, stickability of a supplier, the terms and conditions that people interact with you. And, you know, it isn't intangible. You know, you can put a value on your balance sheet towards it, but it's, you know, to some extent, and there are ways that you can do that from an accounting principles point of view. But at the end of the day, it's, you know, it is very difficult to quantify. But what it really means is that if a transaction occurs from one buyer, you know, from the seller, then in effect, it's what you're banking on if you're buying a business that will continue ongoing and hopefully into perpetuity. And it can be reflected in the lifetime value of a customer. It can be reflected in the cost of sales in a business if you're talking about a supplier. So look, it is fundamental. It is intangible. A business is a complex ecosystem. It's got lots of stakeholders. It's got lots of interactions, and you know, you can't naively just purchase a business. You know, I think about a small business, a coffee shop that's thriving, and then someone comes in and buys it, and then you know, 3 months later, 6 months later, there's no customers there. That's an example of what happens when goodwill isn't continued past that transaction point.
Okay, now Iona, I'm going to hand on over to you and throw a bit of a case study or, you know, I suppose question at you about this. And what if it is, you know, such that you do have an edge, okay, a competitive edge in your market, and it might be that you have a certain position on high street, okay, which gives you exposure to X amount of foot traffic that you otherwise wouldn't get. Now, the previous owners didn't do a very good job with operating this business, and a sign that we often see, particularly in, say, small to medium-sized businesses in the service field, is under new management, okay? Now, does a poor preceding reputation before acquisition, assuming, of course, they've got other advantages, present opportunity? And if so, what is that opportunity, but what risks are attached to taking advantage of that?
Okay. Thank you, James. That's probably one of the most complex questions anybody.
I thought you'd be the person for it.
Okay, so I'm
Good
going to
work,
wind
Jane.
back to the. I'm just going to wind back to the beginning of James's question and work what things forward, and so and I'll give a couple of examples. So one will be an example for a service consultancy, and the other for a retail business. So I've purchased a business. It's on High Street. It's got a shop front. So the first thing I'm going to do is I'm actually going to look at the shop dressing, and what actually differentiates it from the rest of the area that that it operates in as far as retail offerings are concerned. I need to look at the product lines and make sure they're relevant. People sell businesses for a variety of reasons, and they give a variety of reasons, but sometimes a change in ownership can actually be detrimental to a business's operations because its customer base are unsure, and there's a high level of trust with the existing customer base and the previous owner. So what we need to do is we need to look at that customer base, and we need to contact them. We need to invite them in. We need to create an event. And then going forward, we actually need to look at our customer engagement model and how we go about that, how we build those relationships, how we build that trust. Excuse me. We see examples of this with companies such as Miller's or Cotton On or a number of other organisations, Macca's, believe it or not, with their coffee cards. Yeah. So, and that's all about building and maintaining a relationship and a personal relationship with their customer base and responding to something that they need. Everyone loves a free cappuccino or a free black coffee. And that's part of it as well, you know, because, excuse me, we've actually purchased this business, and we've looked at the customer base. We should be able to find a way to communicate with that customer base. And it doesn't matter what sector we're in. Businesses are made up of people that provide services and products to other people who purchase them, or there are consumers. So we have to look at that transactional aspect of any business that we purchase or any business that we're actually operating, we might want to sell. So how do we communicate with the customer base? Depending on the business, I'm really honestly not sure that under new management is a great way to promote any business. I would suggest a wider range of products are now available. Different products are now available. You know, come in and see us, you know, talk to us, tell us what you want. Build that ongoing relationship with the existing customer base, but also add to that customer base as well. And that's very, very important. Often, excuse me, we forget as business owners to have that conversation with our existing customer base. So it is possible as we're looking at purchasing any business to actually talk to customers. Ask for a list, yeah. Talk to the consumer, find out. Social media platforms often are not a true reflection of the integrity or the true reputation of any business. Often they are, the negative comments are put there by disgruntled people, for example, who may have been refused a refund. They may have worn the shirt that they bought 6 times and bought it back with stains on it, and we refused to swap it over. So we should always question what we see out there as far as social media is concerned as well, because it's not necessarily a reflection of true reputation. It may be a reflection of some negative event that's actually happened. So to make a balanced decision and to take a balanced approach, we need to actually talk to our customer base. We need to encourage that customer base to expand. And often we can do that with positive approaches rather than, hey, you left a 1-star review, you know, and I'm looking at, you know, can you tell us about it? So there's a range of different things that we can do. The other thing that we can do is create profiles for our potential clients. And we can look at what's actually, we can benchmark against competitors. So if I was, for example, there's a good example for retail, but a good example for consultancy. Speak to other people in the industry. Find out what standard that they're looking for. Find out what range of services that they're looking for. Again, work to your customer base. Just saying that a business is under new ownership doesn't bring in new business. It doesn't reflect where you want the business to go, and it doesn't reflect your business goals. It also doesn't reflect the capacity of the team. Speaking from experience, often you can work with a team for a time and not really appreciate the depth of knowledge and skill that you've got available to you. And by looking at different management processes and different methods of communication, you can actually have all of those great people be deeply involved in taking yourself and your business forward. Again, a lot of what we do comes down to communication, whether we're communicating with our team's communicating with us, we're communicating with our customers, and the services we provide. So I'm not sure that was the simplest response for your question, James, but it's probably quite a comprehensive one. Look, everything is about people, basically, how we communicate with them, even the product or the service that we provide. People consume that. There are consumers. Your customer base and your conversation with your customer base is everything. Back to you, James.
Thank you very much. So next time I see a banner or a poster in a window that says under new management or under new ownership, there's certainly a lot more behind that particular poster or banner.
I'm going to ask why. Why is it under new management? And why should I walk in there? Because there's been problems.
Very, very true. Now, we're getting towards the end of today's presentation, and I really don't think we've hardly even touched on the surface or scratched the surface of, I think, some of the elements that constitute whether or not, or I suppose what informs the decision as to whether or not really you should buy your own business. So what I'd like to do is put it to the panel for any closing statements at this point, and for anybody who's listening out, let them know what we've got lined up for next time, and things that I think are worth delving into, certainly with respect to business value and things to reflect on when acquiring a business or deciding whether or not to buy, are things such as organisational culture, financials. What are the recipes for success, and what does the future have in store? Now, certainly being mindful of the limited time that we've got left, I dare say we wouldn't have half an opportunity to even scratch the surface on those. So it's a bit of a teaser for what we've got lined up next time. But with respect to what we've covered so far about the elements of competitive advantage, reputation and things like that, Mark, I'm going to hand on over to you for a few closing comments on today's presentation.
Well, look, if you're really asking the question, what would someone buy my business, or would I buy my own business? You've got to put yourself in the shoes of the buyer. Okay, what would they be looking for? So there's preparation, and that's usually years in the making. Okay, so they're firstly going to look at a profitable business, good balance, strong balance sheet, and the like. So you work towards doing that. Make sure your accounting system's in place, you're reporting appropriately, and you're building a profitable business, because that's what people are buying, and getting a sense of what they're going to pay for a business like that. It's fine. Talked before about having a list of potential buyers, right, and communicating with them. And just like Iona said about customers, you want to know the buyer personas, you want to know what they're looking for, walk in their shoes to some extent, so that you make sure that the experience they have, the touch points in buying a business is on the mark, and they are loyal customers going forward. Well, the same thing applies with a potential buyer. You want to really look and say, okay, now what will be the moments of truth that a buyer would go through in terms of them doing their due diligence of your business? So they're going to do due diligence on your financials, yes. Okay, that's fine. That's the number one point, to know whether they're going to buy. Number two, right, they're going to buy other things other than your future profit flow, your future profit earnings. They're going to buy assets in your business. So are they documented? Do you have are the registered domain names and the business names, are they actually, if someone did due diligence, are they actually owned by the entity that you're selling, right? Not by you personally or by another entity. Do you have trademarks on some of your names? So those type of things are an important consideration. They're going to look at your people, right? Are they qualified, right? How long have they been there in your organization? What's written about the culture? So we've talked about that. So that's, you really want to get that in place. They want to see that you've got a governance structure, business planning process and things of that nature. So are your business plans in the year after year? And, are you really articulating the objective and you're hitting those objectives? So, we've gone and touched on lots of these different points, but the key thing is if you want to sell your business, then you've got to start 5 years earlier, right? And put those systems and processes in place, bring those advisors on board, so that they're looking at your business critically and you can actually, you've got evidence that this is a damn good business, right? And a damn good business is one that has future opportunity potential, not just my currently, but my growth trajectory. Okay, so, all the things, it's a complex thing. Running a business is the hardest thing anyone can really do. It's complex, right? There's so many variables. Okay, so you've got to show that you're on top of those and you've really, developing a great position in your market and you're a great position, great business to buy. And if you think you're a great business to buy, you need to be able to show that and be able to demonstrate it and pass the due diligence. So start now. If you want to sell your business, then think early. Start now, prepare those structures and support the fact that it is a damn good business.
Thank you very much. Now, before I hand on over to Jim to leave us with some questions to reflect on in response to today's presentation and obviously get the brain juices flowing, Iona, what are your thoughts that you'd like to leave our audience with today?
Well, my question to Mark is this a great, if you believe that this is a great business to buy, why are you selling it? Why aren't you growing it? Why aren't you changing it? Why aren't you developing it? And that, I think, is the realization. Often as business owners, we put hours and hours and hours into those businesses. We develop them, we grow them. They're an extension of ourselves. And that's very relevant. That's very, very relevant to this conversation. If we believe in our business that much and we're looking at selling it, we need to ask ourselves why we're selling it. What happened? Did we self-reflect? How did we develop as business owners, and how will that take us forward into the future? On the other side of the coin, customer engagement is everything. So as we're reviewing our own businesses, would we buy it? What's happening with its customers? What's happening with its products? What's its place in the marketplace? Yeah, can it be developed, or are its products and services completely becoming redundant because of changes in technology, for example? So that's something else that we need to consider. But again, my question is, if you would buy your own business, why would you sell it? Over to you, James.
Excellent. Thank you very much. You know what I'm going to do? I'm actually going to post up a series of questions with the recording of this particular video so that people who are tuning in will have them there in front of them, because I think they're really, really good ones to think about and self-reflect. And speaking of self-reflection and body of good questions, Dr. Jim Taggart, take us home.
For me, in the last couple of minutes, the question that I ask you is this: why are you in business? What do you think is the differentiator that you provide to the internal stakeholders of your business and to the external stakeholders? If you can't adequately address those with some clarity, then I think it creates a whole range of things. Mark and Iona highlighted a number of really critical operational matters about a business. But if your entrepreneurial spirit, your animalism, whatever term you want to use, is not unrelenting, because business is tough. It's challenging. You put your assets on the line. You put who you are on the line. But you need to also surround yourselves with those people that will come with you on that journey. You know, I often think of people who are in really stressful situations and experiences in life. Imagine being in war. Imagine being, you know, Antarctica and being Scott and having 50 people and having no food and to do all of those things, to continually keep people and to tell them the story that enhances hope, because business is all about hope. You set aside a number of internal objectives and vision and things, and you strive so hard to achieve them. And so I say to you, once you lay that platform, you need to get those people around you. Who is around you that will help garner, who will help shield, who will help provide and protect your vision. Have a great day, and we hope that here at Mentor, we're provided for you challenging questions that allows you to really think about your business, your journey, and ultimately your destiny. Have a great day.
Excellent. Thank you very much, Jim. Thank you very much, Mark and Iona.
Thank you, James. Thank you, Mark. Thank you, Jim.
Thank you.
Right there, Ron.
James, I've got to say, and that's important, you are a wonderful band leader in terms of the orchestra. You allow us to take individual journeys, and we hope that what's being said here, there's a big engine room here, you know, there's like 100 years worth of business experience here that allows people who watch this to try and think about where they want their tomorrows to be.
Excellent. Thank you very much. Well, for those who've joined us, we hope you found today's Business Inside series very insightful. We hope you've got some questions in your mind and really starting to develop your critical thinking skills again, which has been one of the goals and aims of this series over the last couple of months. Again, stay tuned for notifications on the next Business Inside series, where we'll have an opportunity to cover off some of the remaining elements that may inform the decision as to whether or not you should buy your own business, such as organisational culture, the recipes, financials, things such as that. And again, we'll deep dive into some of those elements a little bit more. As always, head on over to mentor.edu.au if you'd like some more information. And of course, a recording of this will be made available on our YouTube and Facebook page. Excellent. Have a great day, and we look forward to catching up again with you soon. As always, take this opportunity to excite your potential. See you later, everybody.
Bye, everyone.
Bye.
Thanks, James. Thanks, Mark.
Thanks,
Jim.
Iona. Thanks, James.
Bye-bye.
Marcus, thank you. How are you?